With everyone rushing to buy shares in Japan, why should you be only interested in buying one? Welcome back to Stock Whispers, your gateway to investment brilliance. Today, we're diving into the world of Japanese stocks, a hot topic given the Nikkei 225's recent surge past the 40,000 mark for the first time ever. But there's a twist. While everyone's rushing to buy Japanese shares, I'm here to tell you why you should buy just one. Yes, you heard that right. Just one. Let's get into it. First off, let's talk about the current excitement in Japan. The stock market is on fire, breaking records left and right. Imagine a dragon from a fairy tale, but instead of breathing fire, it's breathing out stock market gains. That's pretty much what's happening. This frenzy comes at a time when the Japanese government has launched an expanded tax-free investing account. The idea is to coax the hoarded trillions of yen from under the Japanese household mattresses into the stock market. Imagine every household in Japan lifting up their mattresses and finding not just the odd sock or a forgotten magazine, but trillions of yen waiting to be put to work. Sounds like a plan, right? But here's the kicker. For individuals dreaming of being the next Warren Buffett of Japan, there's a pretty significant roadblock. It's like gearing up for a marathon, only to find out your shoes are tied together. This hiccup in the master plan has many would-be investors scratching their heads, wondering if they'll ever get to sprint in the financial race. Speaking of Buffett, did you know that at the ripe old age of 11, he made his first foray into the world of investing? Yup, he decided to dip his toes into the capitalist pond and bought himself 3 shares of City Service preferred stock. That's like dipping your fries in ketchup, but with money. Now, let's fast forward to today, where Buffett is basically the king of the investment jungle. He's built an empire so grand. Seriously, this guy knows how to turn a dime into a dollar faster than you can say stock market. But wait, here's where Japan comes into play. They're on the hunt for their own Buffetts. They've got their binoculars out, scanning the financial horizon, hoping to spot the next big thing. However, there's a tiny hiccup in their plan. You see, unlike Buffett casually strolling into the market and picking up a few shares here and there, the Tokyo Stock Exchange has some strict rules. They're like the bouncers at a fancy club, and you can't just waltz in unless you've got at least 100 shares in your pocket. Now, picture yourself as a small-time investor in Japan, eager to get in on the action. You've got your piggy bank cracked open, ready to invest, but then you find out about this rule. It's like trying to play a game of basketball with a hoop that's 10 feet higher than usual. It's tough, it's frustrating, and it's enough to make you want to throw your calculator out the window. So while Japan searches for its own Buffett, small investors are left feeling like they're trying to catch a shooting star with a butterfly net. Tough luck, right? Now, it's not all doom and gloom. The market has tried to adapt, with online brokerages offering ways to buy less than 100 shares. But these come with their own set of issues, like higher fees, trading limitations, and, perhaps most importantly, you don't get to feel like you're truly part of the company. No voting rights or shareholder meetings for you. It's like being at a party where you can't dance. Not fun, right? And let's not forget about those pesky fees. It's like trying to buy a movie ticket and realizing you have to pay extra just to see the previews. Talk about a buzzkill. Plus, with trading limitations, it's like trying to drive a Ferrari in rush hour traffic. You've got the horsepower, but you're stuck in first gear. So while online brokerages might offer a workaround, it's like putting a band-aid on a broken arm. Sure, it might cover up the problem temporarily, but it's not a long-term solution. But why the obsession with Japanese stocks, you might ask? Well, despite these barriers, there's a growing preference among investors, especially the younger crowd, for international stocks over local ones. They're drawn to brands they know and use daily, like the tech giants. It's easier and sometimes cheaper to invest in a single share of a company like Apple than in a Japanese company listed in Tokyo, even if you're willing to brave the currency risk. It's like comparing apples to sushi rolls, both delicious, but one might be more familiar and easier to digest. Plus, who wouldn't want a piece of the apple pie? It's like owning a tiny slice of the future, complete with shiny gadgets and trendy innovations. And let's not forget about the pull of international stocks. It's like having a passport to the global economy. You're not just investing in a company, you're investing in a slice of the world. It's like collecting stamps in your travel diary, except instead of exotic locales, you're racking up dividends and capital gains. The Tokyo Stock Exchange isn't turning a blind eye though. They're considering ways to lower the 100 share lot barrier, with hopes to make Japanese stocks more accessible to everyone. And let's not forget the companies themselves. Some, like Nippon Telegraph and Telephone Corp and Nintendo, have started conducting stock splits to make their shares more affordable to individual investors. So while we wait for the Tokyo Stock Exchange to work its magic and for more companies to follow suit, let's keep our eyes peeled for new opportunities. Who knows, maybe the next big investment is just a stock split away. Yet for all the challenges, the joy of owning a piece of a company you believe in is undeniable. It's a simple joy that even an ETF can't replicate. It's about feeling connected in a tangible way to the successes and challenges of a business. And let's face it, there's something special about being a shareholder. It's like being part of an expensive club, but without the fancy membership fees. You get to ride the roller coaster of ups and downs alongside the company, cheering at the highs and commiserating at the lows. It's like having a front row seat to the greatest show on earth. Except instead of clowns and acrobats, you've got quarterly earnings reports and annual meetings. So while ETFs might offer diversification and convenience, they can't quite capture the magic of owning individual shares. The influx of foreign investment has been a significant factor in the recent boom, but for this growth to be sustainable, Japan needs to tap into its domestic investor base. Encouraging individuals to invest, even if it's just in a single share, could be a game changer. It's like trying to bake a cake without sugar. Sure, you might get something, but it's not going to be as sweet as it could be. Japan's got all the ingredients for success, but without getting its own folks in on the action. But fear not, because the solution might be simpler than you think. Imagine if every salaryman and sushi chef in Japan decided to invest in just one share of their favorite company. It's like a financial revolution, one sushi roll at a time. And who knows, maybe that one share will turn into 2, then 3, and before you know it, we've got ourselves a full-blown investing frenzy. Remember Warren Buffett's advice though. While the thrill of picking stocks is undeniable, the wisdom of investing in a broad index fund cannot be overlooked. Buffett himself said he'd have been better off putting his initial investment in an S&P 500 tracker fund. Yet the story of his first stock purchase remains a powerful testament to the world of stock investing. As we watch Japan navigate these exciting but challenging times, let's not forget the lessons from the past and the potential of the future. Whether you're looking to buy one share or 100, the key is to start somewhere, stay informed, and keep learning. After all, every great investor starts with that first step, or in this case, that first share. So whether you're a seasoned investor or a newbie dipping your toes into the market for the first time, remember to keep your eyes on the prize. After all, the stock market is like a roller coaster. There are ups, downs, and plenty of twists and turns along the way. But as long as you buckle up and hold on tight, it's bound to be one heck of a ride. Thanks for tuning in to Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, Keep listening to those whispers and let them guide you to your next big win. See you soon!